Bill Soriano from Pittsburgh here. It's about 10 a.m. on Sunday, April 19th. In this video, I'm doing a live here in the group, and I'm going to put this video on YouTube. This will serve as the main review video for the product Fibo Quantum, for the Fibo Quantum indicator. And it's also going to serve as the main training video to show you how to take the trades or what conditions need to exist. Now, in the PDF you get with the indicator, basically all it tells you is to take trades with the trend. It also gives, I think, about maybe six pairs that it works best with. Now, right now, we have 16 pairs on the screen that we scan every day. Now, in testing some of these pairs, the indicator works better on some of these pairs than others. So that's the purpose of the demo test, is to decide which pairs this indicator works best on. And then we can reduce that number down maybe to 8 or 10 at some point later on when we begin taking live trades. But anyway, I have the sheet printed up. I have the sheet will be in the group later on today that gives you all the rules for taking the trades. Everything I'm going to go over here on the charts, but if you want the actual printout of the sheet, you do have to join the group. It's free to join the group. The link will be in the description area of this video. If you're watching this video right now live, then you're already in the group, obviously, because I'm making the video here on Facebook right in the group live. But if you're going to see this on YouTube, then the link will be in the description area to join the group. It's free to join the group. You'll be able to get access to all the videos, screenshots, images. You'll see all of these trades we're looking at today that we look at today. We took most of these trades during the week. So I'm not just like opening up my MT4 with the indicator on it and showing you, hey, this is what would have happened. We actually took most of these trades during the week. We actually used the indicator for the last 2 weeks, as a matter of fact, and we've been documenting it in the group, and we've been doing this on demo. Okay, until and for probably for 1 more week, and then we're going to start taking live trades at that point. So what we have here is I had to zoom out a little bit on the chart so you could see. We take trades on a 1 hour chart. Okay, so each one of these areas is 1 day, right? 24 1-hour candlesticks in each day here. So if you look, and you can get in the group, you'll be able to get the information on how to set up the indicators on your MT4 charts. So I could probably make a template of this and send it to you. But basically here, we're going to get rid of a couple things here. We're not going to, a couple extra moving averages. We have the 3 moving averages, okay? And so we have the 3 moving averages. We have the Fibo Quantum indicator. We have some crossover arrows, and we have the ADR marker. Now, the ADR marker, that's not, we'll talk about that briefly here in the video, but it actually, the ADR marker, I put it on here just so I know it's like kind of the last thing I look at to decide whether or not to take a trade. But we'll talk a little bit more about that maybe later or in a separate video. The ADR, that's the average daily range, and we have a 14-day right over here. As you can see, it gives you a high and a low for the next day. The work time indicator here, these are some custom indicators here. The work time, the ADR marker, and the crossover arrows are custom indicators. The Fibo Quantum, obviously you have to purchase that, right? You can get the indicator from me, but your license, it has to be registered with the owner of the product, or else it won't work in MT4. So, and you have to purchase it to do that. So we have the 3 moving averages. The work time is what gives us this box here. And the box is when we don't take trades. That's from 12 p.m. Eastern time to 8 p.m. Eastern time. So during that time, we don't take any trades. And then, like I said, crossover errors, we're not really using too much, but they're on there. And then we have the ADR marker, which the ADR marker is the only thing you can't see when you go back in time to try to see if you would have taken a trade. Because once the current day is over, the ADR marker disappears. But basically all it does is when when the currency has met its average daily range for the past 15 days, that's what this one tracks, then the ADR marker turns red. And that tells us that if we're getting ready to take a trade and we're taking a buy trade like right here, say, and the ADR marker turns red right at that level, that tells us that it's probably not going to move any higher, that particular day. So you may not want to take that trade. But that's really something that I look at. It's not really part of the rules that are in the group, but it's just kind of one thing that I look at. If I see the ADR marker turn red, then and I'm taking a trade that's close to that, then I know I may not take that trade. That's all. That's all we'll say about that. But anyway, you see here we have the red, white, and blue moving averages, right? The red is the 13-day, the white is the 21, the blue is the 89. So, and we use these moving averages to determine the global trend. Okay, so obviously when the 13 is below the 21 and both the 13 and the 21 are below the 89, we see that's a downtrend. That confirms a downtrend. And when it's the opposite way around, when the 13 is above the 21 and both are above the 89, then that confirms an uptrend. So basically it's red, white, and blue like the American flag. So it's easy to remember when you're looking at it, right? Red, white, and blue from the bottom up for a downtrend, red, white, and blue from the top down for an uptrend. Now, we also, that's one thing. And that's what, basically, when you look at the PDF for this indicator, it just tells you to worry about the trend, okay? And, it doesn't really tell you how to determine the trend. It leaves that up to you. So we're using these three moving averages. And these three moving averages, we're using, like I said, the 13, the 21, and the 89. Those are all numbers in the Fibonacci sequence. Since we're using a Fibonacci indicator, we're going to use numbers that are part of the Fibonacci sequence for the moving averages to determine the global trend. So that's how we determine the global trend. Second thing we look at is what I call the global trend count. So this is the number of days that the current global trend has been in effect. So to determine this, you look at the last time the 13 and 21 both crossed the 89 up or down. And then you're counting the number of days that it stayed on that side of the 89 to determine, the global trend count. So in this example right here, we're on EURGBP. Right here, back here, okay, this was Friday's trading right here, right? Right here, just looking here, we see that the global trend was down right here, right? Red, white, and blue starts to move differently, right? Now right here, the two faster moving averages cross above the 89, right? For one day, on this day here, then the next day they cross right back down below. So now they've been down below 1, 2, 3, 4, 5, 6, 7, 8 days. So the global trend count on this would be 8, and it's a downtrend, right? So that wouldn't change until both the 13 and the 21 cross above the 89, like they did here. So when that happens, then the global trend count resets. Okay, but right now the global trend count is 8. Okay, so now we're not going to take a trade. Here's the basically to take a buy signal, right? When the Fibo Quantum indicator, when we see a buy signal, right? When price crosses the buy, entry signal line here on the way up, we're going to want to make sure that a global uptrend is confirmed. So in other words, the 13 and the 21, the 13 is above the 21, and both the 13 and 21 are above the 89, right? We want to make sure that that buy signal line and price at the time of the signal are both above the 89 as well. Okay, and the global uptrend count is 6 or less. Okay, so basically what we're saying is after a currency has been in a trend, right, for at least 6 days, after the 6th day, if it continues in that trend like this has right now, this is 8 days now, okay, we're not going to take any more entries with the trend. Why? because we feel the trend is about to reverse. It's not going to keep going down forever. So, in your PDF file you get with the Fibo Quantum indicator, it says, hey, take trades with the trend. Well, we're not going to take a trade with the trend if that trend has been in effect for more than 6 days, because we feel that at that point it's getting ready to reverse. Okay, so if you could see right here how I put no trade in here, we didn't take this last trade here, right, on EURGBD. You can see it gives a sell signal right here. Okay, now remember the white box is 12 p.m. to 8 p.m. Eastern time. We don't take any trades during that time. So if you look here, you see that the sell signal goes off, right? And, we don't take that trade. Why? Okay, it's in a global downtrend, right? Right? Red, white, and blue from the bottom up, right? The 13 is below the 21, and both the 13 and 21 are below the 89. But we also have to check for the global trend count. And in this case, this is the 8th day now. See, it crosses right here. 1, 2, 3, 4, 5, 6, 7, 8. That was the 8th day. So after the 6th day, right, we're not going to take any more trades with the trend. We're just going to wait because we feel that the trend's getting ready to reverse. It may not reverse on us, but we don't like the probability of that trade winning because of the fact that it's been moving in that direction for so long. Okay, so now if both these faster moving averages come up here and they cross back above and then they cross back below, then it resets. Now it's back to 1 day. So we didn't take that trade. And that trade, really didn't go anywhere. It's just been kind of, chopping along right in that area there. But if we scroll back here, what we're going to see is a trade that we could have taken was right here. And we added this particular pair to the chart scan later in the week. So we really didn't take any trades on this pair. But right here, we get the sell entry, right? We see that it's in a global downtrend, red, white, and blue from the bottom up. If we look at the trend count, it just crosses back down, right? The two faster, the red and white lines just cross below the blue line on this day right here. So that's day 1. The global trend count is 1 right now. So we would have taken that trade. Now, the other thing that we do is, when do you take profit on a trade? So right now what we're doing is we're trying to get in these trades and get out. Okay. So obviously when you take the trade, you're going to set your stop loss up here where it says to set it. Okay. Now you do have another option for that. You could use the 89-day moving average, okay, for the stop loss. Okay. So that will eliminate some of your risk there. Okay. Right. So instead of risking, 36 pips, we would be risking 24. Okay. However, 36 pips isn't that much to risk. On some of these pairs, the difference between the sell entry and the stop loss may be 100 pips. Okay. So in those cases, you might look to see if the 89-day gives you a more effective and, just a more economical stop to put in place. So anyway, what we're looking for now is, if we're going to take this trade, we want to see if it gets to take profit 1. So our goal is to get to take profit 1 or 50 pips, whatever comes first. Okay, in this case here, take profit 1 is 36 pips away. So we would set our take profit right there at take profit 1. And when it goes down, we would be out of the trade with 36 pips profit, and that's it. Okay. Now, you say, well, it's going to keep going down, Bill. Why are you getting out? Because in back testing on this product and taking trades live with this product, there's a lot of times where price moves back on you. Okay. So you have to take your profit when you get it. Okay. And also, the indicator may give you another chance to get back in. In this case, it does. Look right here. Okay. So you take this trade, you get your profit, you're out of the trade. Comes down a couple days later, you get a sell entry again. Okay. right? You're with the trend. Do the global trend count, 1, 2, 3. That's only day 4 of the current trend. So you would take this trade as well, right? And write down to take profit 1, you get your profit, and you're out of the trade with another 26, 27 pips. So you've taken 2 trades now here, and you've won both of them, okay? Now, if we scroll back here, we're going to scroll back, go back to see where our next trade would be with this. Okay, you see this doesn't go off here. Remember, when you're looking at this line here is the sell entry, okay? So the candle has to be, it's only during that time period right there. You don't take the trade here, you don't take the trade here once that's gone. It has to go off, price has to cross it during that time frame right there. So here we don't have any trades. Now right here, we get another sell entry. Okay, so what? Did we look at the global trend? It's down, right? Red, white, and blue from the bottom up. We got to do a trend count. When was the last time this crossed? Well, it looks like back here, right? Right here, the red and white cross the blue line down. So that's 1, 2, 3, 4, 5. That's the 5th day, right? The 5th day. So we take this trade, right? It pulls back on us, right? Our sell stop is all the way up here. Remember, we're going to use the sell stop that's printed on the chart, or we may use the 89-day moving average. In this case, it doesn't matter, right? We don't get stopped out. It moves down here. Now look what happens. It comes all the way back, right? We don't get our profit. Remember, our profit target, oh, I'm sorry, we do get our profit. Our profit target is take profit 1 or 50 pips, whatever comes first. Right here, we're out of this trade, right? 50 pips is right here. Okay, so we're out of that trade with our 50 pips. Okay, now once we get out of the trade, okay, we won't re-enter that trade anymore for that day. However, if price would move back above the line the next day and close above the sell entry line and then move back down below, we would take that trade again the next day if all the other conditions that we need to be met are met. Okay, now in this particular instance, it looks like our global trend may be in question if we try taking that trade again, but it doesn't close back above here. I'm going to show you an example of where you could have taken a trade 3 days in a row with this indicator and our method and won all 3 trades. Okay, but anyway, right there, we've taken this trade, right? So now we're 4-0, right? We're 4-0. The last 4 trades have won. Okay, the next trading signal is right here. It's a buy entry. Okay, price crosses the buy entry right here, right? The global trend is there, red, white, and blue from the top down for an uptrend. But what happened here is if you look at the global trend count, we're way up. Okay, this has been in an uptrend for many, many days. So we wouldn't have taken that trade, even though that was a very good trade and it won. We wouldn't have taken that trade because we're looking for the reversal at this point. And we do finally get it here, right? But we would not have taken that trade. It was a good trade. We would not have taken it, so we're not going to count it. However, right here, right, we would not have taken that trade either, probably. Yeah, because the line, the 2 faster moving averages never cross down below, right? However, right here, we would have taken the trade. Okay, so here's the cross up. So right here, the global trend count is 3. So remember, it has to be 6 or less in order to take the trade. The global trend count has to be 6 or less, right? When you're trading with the trend. So we would have taken that trade. So all 5 trades won. Okay, let's look at another pair here. I can't remember if it was this one right here, CHFJPY. Okay. So this was Friday. This was Wednesday, Thursday, and Friday, right? Now here's a sell entry right here. You can see here at the time of the sell entry going off, the global trend is intact, red, white, and blue from the bottom up, right? What about the global trend count? Well, here's the last cross, 1, 2, so that's day 3, that's day 4, that's day 5. So all 3 of these days were good to go with a short signal, right? Because we're in a global downtrend, and the global downtrend count is 6 or less. Right here, we would take this trade, okay? Now remember, our stop loss is up here. We take the trade. You know what? I'm going to make this bigger so you can see this. Okay, because this is really a good trade to look at, because this gives a valid signal 3 days in a row and it wins all 3 trades. Okay, so right here we get the signal to sell. Right now we already determined we're in the global downtrend. The global downtrend is that's the 3rd day right there. This is the 4th day. This is the 5th day, and that's determined by the red and white moving average being down below the blue one, the 89. So the 13 to 21, 89. So right here we take the trade, okay? And remember, what's our goal? Take profit 1 or 50 pips, right? In this case, take profit 1, 28, 29 pips, we're out of the trade, okay? That's it, we're out. We wouldn't go back in that trade anymore that day. Now the next day, after it moves back up here, right? Now look, I want you to see this. If we would not have exited that trade right there, if we would have held on, it eventually moves right up and stops you out. This is why it's so important that you set your profit target at take profit 1 or 50 pips for right now. That's what we're using for right now for the purposes of testing, and that's what we'll use when we take our live trades. The reason for that is you're going to get out of some trades with a profit that would eventually go against you and you would lose money. Okay. Now there will be some trades that will go a lot further, but the indicator will give you a chance to get back in those trades on another day. Sometimes it won't, sometimes it will. But the main thing is to get your money and get out of the trade, right? So you make money right there. Now the next day, boom, it gives another signal. Now right here, when it gives the signal, the global trends kind of messed up, right? Because the white is now below the red. So we have to wait till right here. Right here, we get another signal to get in this trade. And when that happens, the global trend is intact now. It's red, white, and blue. So right there, take profit 1, we get another 28 pips, and we're out of the trade. Okay, what happens the next day? It moves that back up again, and then it gives another signal to get back in right here, right? And we take our profit again a few hours later with 28 pips, right? So we made about 56, about 80 pips on this particular currency pair in a 3-day period, winning 3 trades in a row, all with the same signal. Okay, now in the PDF that you get with the indicator, it tells you to only take the first trading signal. Now, the reason why it tells you that is because it's going to assume that you're going to stay in that trade for a longer period of time. But if you get out of the trade, then you can get back into the trade the next day if the signal goes off. Now, I wouldn't re-enter the trade the same day, but the next day, if all the conditions exist, right, you're with the global trend count is six or less, right, you can get back in that trade. So that's what happened there. Now, if we go back, let's make this a little smaller now, just to go back here. Now here we see we're in a global uptrend, right? These days here, we get a cross up. So 1, 2, 3, 4, 5 days in a global uptrend, right? Right? We get a buy signal right here. We're in an uptrend. The global trend count is 2, right? So what do we want to do? We want 50 pips or take profit 1. This moves up 57 pips, would be out of the trade, right? What happens the next day? The next day it comes back down. It closes below the buy entry, and then it moves back up through it, right? The global trend, the global uptrend is still intact. The global trend count is what? 3, right? 6 or less, we're allowed to take the trade. So we take the trade again the next day. What happens? It moves up, we get another 50 pips, okay? Now, depending on your entry, you may not have been at 50 pips right there, but it just moves back down, and then it moves back up again for a 63 pip gain. So at some point here, you would have gotten out with a profit. Again, 5 trades. The last 5 trades all won, right? Let's look at another pair, CADJPY. Okay, so right here, we got a buy entry, which was actually a good entry, but we're in the white box. What's that mean? We don't take trades. That's 12 p.m. Eastern Time to 8 p.m. Eastern Time. There's normally not enough action in the market to move these currency pairs enough for you to take the trade at that time. That was an anomaly there. Something was going on. I don't know what it was. It wasn't news. I checked for news. This made a big move up. You could have gotten profit, but we didn't take the trade. Okay. Now, what happens? It moves back down below, and then it moves back up above, right? Gives a buy signal right here. However, we're currently in a downtrend, right? In order to take a buy signal, we have to be in an uptrend, and the global uptrend count has to be 6 or less. Right now, we're in a downtrend. Now, you can take a trade, and this is in the rules. Trades can be taken against the global trend when conditions exist that tell us that the trend is about to reverse. And what that would mean is that in order for us to take this buy entry here, our global trend count, right? Our global trend count would have to be 6 or more. So the downtrend count now. So the global downtrend count right here is 1, 2, right? Here's the cross, right? Here's the last cross. 1, 2, 3. That's day 4. So we would not be looking for that to reverse yet. Now, if that was day 6 or 7 or 8 of the current downtrend, then we may be looking for that to reverse, and we could take a buy signal if the buy signal line and the price were above the 89. Since we're taking a buy, it has to be above the 89. So none of that exists here, right? We would not take this buy signal right here against the trend because the global downtrend is only on its 4th day, not 6 or more. The buy signal line is below the 89 day, and price when the signal goes off is below the 89 day as well. So we would never take that trade. Okay. Let's go back to see. We would take this sell entry right here, however. Okay. We would not take this sell entry either. Okay. Because at the time of this entry, the global trend is still up. Okay. Let me look at this a little closer. Let's go back. Let's see. The global trend is, this comes down through here. And we almost have, when this actually comes down through, you could see that it looks like it's almost red, white, and blue. So the trend is almost intact there. But that would be a little bit iffy. Let's go back to another one. So right here, we get a buy entry, right? Right here, we get a buy entry. We're in a global uptrend, right? Moving averages lines are red, white, and blue. The 13 is above the 21. Both the 13, 21 are above the 89. What's our global trend count? What's our uptrend count at this point? Well, here's the last cross, right? So 1, 2, 3. That's day 3. So it's safe to take that trade. What are we looking for? 50 pips or take profit 1. Right there, we get to 60 pips. So we would be out of that trade. Now right here on the next day, we can't get back in that trade because the moving average lines are right on each other. So we don't have a situation where it's red, white, and blue from the top down. Okay, let's go back here, and we have another buy entry right here. Now at this time, the global uptrend's up, right? The trend just changed, so that's day one, right? We take that trade, we can take that trade. Okay, what happens? We take the trade, it moves up about 30 pips, and then it drops down. Now our stop loss is all the way down here, right? So we're not going to get stopped out. Now, one thing I do tell you to do is once you're in the profit by at least 20 pips, right, which we are here, I like to trail this stop loss up by 20 pips, okay? If you do that, though, it's still only right here. So you don't get stopped out on this pullback. And then once it do, it moves right back up, right? You go into take profit 1 or 50 pips, and you get 92 pips. You get 50 pips easily right there. Okay. Now, what we do, guys, is just so you know, we're setting when we take the trade. Okay, when we take this trade, we're setting our stop loss right away, right down here. Okay. So we're going to set our stop loss right down here. Now, I told you that sometimes you can use the 89-day moving average for a stop loss as well, but it needs to be at least 50 pips away. And in this case, you know, it wasn't quite 50 pips away. So had you used your 89-day here for a stop loss, which I wouldn't advise you to do, you would have gotten stopped out of the loss there. Okay. But like I'm saying here, you're going to, when you take the trade here, you put your stop loss in right there. Okay. You can use the 89 if it's at least 50 pips away, right? But in this case here, it wasn't. Okay. Now, you're gonna set your take profit on this one, right? Since the take profit is 100 pips away, you're gonna set your take profit at 50 pips, and that's it. You can walk away from your computer now on all your trades, or if you're going to sleep at night, you don't have to worry about your trades getting to a certain area, and you don't get your money. Now, if you're if you're sitting right in front of your computer, and you're going to be there watching these trades, which I can't do. I don't know if you can do, but I don't recommend it. But if you are the type of person that just sits there and watches the trade, then you don't have to actually set that take profit, and you can try to get it to go a little bit more. So what I mean is, say it goes up 50 pips and you're sitting there, you don't have your take profit set because you're watching the trade. Okay. Now, if you're going to get away from the computer, you have to set that take profit so that if it hits it, you get your money. But if you're going to sit there, you cannot set the take profit. You can watch the price movement. And if it goes up 50 pips and if it goes up 60 pips, right, you can trail the stop up to 50 and see what happens. See if you can get some more out of it. I don't recommend that. That's a personal thing. If you're going to sit right in front of your computer, you can do it. But if you got to leave the computer for any reason, you got to make sure that take profit's there. And if you're going to bed at night, you definitely got to make sure that take profit's there. So I've showed you some trades so far, and really we've won all the trades. Let's look at another pair here, GBP NZD. Okay, we're going to look at this pair and then one other pair, and that's probably going to be it for this review video of the Fibo Quantum indicator. But the thing to remember is, if you're watching this late, is that I have a complete set of of rules on when to take these signals, and that sheet is in the group, and the link to the group is in the description area of this video if you're on YouTube. If you're watching this video now in the group, then you're already in the group, so you don't have to join the group again. But I'm going to be putting that sheet in the group later today after I finish this video, and it's free to join the group, but you do have to join the group to get into the group to get the sheet. So click the link below the description area of this video and join the group. I'll approve your request right away, and then you'll be able to get in there and print out the sheet so you'll know what I'm talking about. You'll have a better idea what I'm saying on this video if you have that sheet in front of you. Now, right here, Right here, we get a sell entry on Friday, right? We actually took this trade. This was one of the trades that we took, right? Now, when the entry goes off, as you can see here, it's not quite the red, it's not quite red, white, and blue at that time. Let's make it a little bigger. Here's where the entry line, here's where the sell line goes off. There's the signal right there. Well, remember, in order for us to be in a downtrend, these lines have to be red, white, and blue. Okay. However, we can take a trade against the trend if, and here's what needs to happen. The global trend count is what? 1, 2, 3, 4. So we would not take that trade. Okay. Now, what I did was, I think I took this trade and it probably wasn't a valid trade to take once you really look at our rules. So let's go back to another one here. Let's skip over that one. We did get 50 pips on that. Okay. It moves right away. We got 50 pips and we got out. Okay. But the current global trend count was not 6 or more. And the moving averages were not quite in line at the time of that signal. Now they do get in line right here. Okay. So right here, you could decide to get in that trade because the lines are now red, white, and blue, right? And that confirms the downtrend. And if you do, you still get 50 pips and get out. I think we took the trade right here a little bit earlier, but we probably shouldn't count that because that's a little bit iffy based on our rules, right? Right here, we get a buy entry, right? And at the time of the entry, right, again, the same thing happens. It's not quite red, white, and blue, right? But in this case, the global downtrend has been in effect 1, 2, 3, 4, 5, 6. That's the 6th day, right? Actually, the 7th day of the global downtrend. So at that point, right, if the global downtrend was in effect for 6 days or more, that signals that a reversal may be coming. So if the buy entry line and price are above the 89 day, which they are, you can take that trade. That's a good trade. That moves up like crazy there. You get 50 pips right away and you're out. Okay, this trade here, if you get in right here, you get your 50 pips in 3 or 4 hours. You're out of the trade, and that's the best way to have it. The unfortunate thing is you don't get any re-entry, there, but that's a winning trade. If we go back a little further here, we have a sell entry down here. Okay, the global trend is intact, right? It's 1, 2, 3, 4. The 4th day of the global trend count is 4. Again, you may not understand what I'm saying here when I'm talking about the global trend count. I've tried to explain it here in the video, but the sheet with all the rules is in the group. So you'll be able to get that sheet. You'll be able to print it out. You'll be able to study it. And then when you go back and watch this video at a later time, you'll understand more what I'm saying. Okay. Right here, you take this trade. Again, take profit 1 or 50 pips. We're out with 50 pips. Right? Now, GBP/NZD is one of those currencies that's very volatile and it moves very quickly. Okay. So you're going to get your 50 pips and you're going to get out. Okay. Now, right here, you get a buy entry, right? You can't take that buy entry because you're in a downtrend. Okay. And in order for you to take a trade against the trend, right? Right. If you're trying to take a buy, then the global downtrend count would have to be 6 or more, but it's not. It's only 4 here. So we would not take that trade. And it's a losing trade. Go back a little bit further. We get a buy entry right here, right? The global trend is in place, right? The last cross was right here. So 1, 2, 3, 4. Global trend count is 4. We take the trade. We easily get 50 pips and we're out of the trade, right? Moves up 243 pips, comes back another 331 pips, right? If you're trading GBP/NZD, This is one of those ones that you might want to sit in front of the computer and watch, not actually put that take profit in, just kind of watch it, see what happens. And when you get up like 50 or 60 pips, maybe you trail the stop up. Okay, when's the next one? Going back here, we get a sell entry right here. Okay, red, white, and blue. Right, we got a cross, so that's a losing trade right there. Okay, that's a losing trade. We get in, let's see. It's not a losing trade. Why not? Right, I was kidding with you guys. That move there was 74 pips. So if we took that trade right there, right, we would have been out with a 50 pip gain. Now, when we go back and we look at these, okay, there's a couple things we can't take into account, right? We may not get in that trade right at the sell entry line, right? We might miss it by a little bit, okay? So we might miss it by a little bit. We might not get in till right here. We're still up 50 pips. But what I'm saying is when we're looking at these trades and we're going back, we may not have gotten into trades right at the entry line. So our results may be a little bit different. Also, this is one where maybe the ADR line that I talked about earlier was lit up red right here, and we wouldn't have taken the trade. We don't know that. We can't tell that when we're looking back. However, though, in the group, when you get into the group, you're going to see my live videos where we actually did take the trades live, right? We're on the demo account, but we're taking the trades live. And you'll see that there are, we do not get in right at the entry line, right? And there are times when you can see that ADR line is lit up red. So that would be a winning trade because we get 50 pips, right? It don't look like a winning trade when you look at it, but we do get 50 pips on it. So we would be out of the trade. Now the last, what do we got here? We have a sell entry right here, right? The time of the entry, we're in, right? It's red, white, and blue, right? We get in right here, and we're out with our 50 pips, right? Right prior to that, we had a buy entry, okay? That's on the same day. Now, at the time we took the buy entry, like I said, this particular pair is very volatile. So these moving average lines will cross up and down more on this pair, as you can see here. We would have taken that trade, and again, 50 pips right away, okay? So those two trades are winners. So in going back through here, you haven't seen very many losing trades, right? There are some losing trades. What I did was, guys, and I don't want to make this video too long here, so I'm not going to bore you with all of them. But I took all 16 of these pairs, okay, yesterday on Saturday, 4/18, and I went back and I checked the last 5 trades on each one of these pairs, and using the rules right in the group for the setup, right? Those rules are in the group. You have to join the group to get the rules, and then getting out of the trade, right? Setting the stop loss, and then setting the take profit at take profit 1 or 50 pips. 65 out of those 80 trades that I looked at, right? I looked at the last 5 trades for all 16 pairs, right? All 16 pairs down here. That's 80 trades I looked at. 65 of them, or 81% of them, were winning trades. So that means when you use the method I give you in the group, right, and you follow it, you should be able to win 80% of your trades. Okay? Let's look at one more pair, GBP, JPY. Okay, let's look at this pair, see what this does. Right here, we get a sell entry, right? The global trend is not quite in place at the time of this sell entry, right? It's almost there, but not quite. However, we can take a trade against the trend if it's a sell, if the global uptrend is on day 6 or more. So here's the last cross, right? 1, 2, 3, 4, 5, 6. That's actually day 7, 8. That's day 8 of this uptrend. See how the red and white lines cross the blue line up right here. That's day 1. You count every day that they stay above. 1, that's 2, 3, 4, 5, 6, right? It almost crosses, doesn't? 6, 7. This is now day 8. So if it's day 6, 7, 8, 9, we're looking for this trend to reverse. Okay, so we can take this trade as long as this sell entry and the price at the time the signal goes off is below the 89-day moving average. Okay, if it would still be above, we wouldn't want to take the trade. But in this case, it's below, right? And this thing goes right down 83 pips. So you would get out of 50 pips or take profit 1, whichever comes first. You'd get out with a 50 pip gain, right? Oh, wait, comes back up. The next day, you get another signal, right? Now, your global trend is intact, right? It's red, white, and blue from the bottom up. You're on day 2 of the global trend count, global downtrend. It's a global downtrend, day 2. So you take the trade again, right here. And again, you get another 50 pips. So 2 days in a row, you take the trade, you win. Now, I believe we took one of those trades in the group. We took one of those trades. You'll see it on one of the live videos there. Okay. Now, right here, here's a very good point. Let's make this bigger. Let's make this bigger. Now, we've already determined that this was what? The global uptrend here is 1, 2, 3, 4, 5, 6. This is day 7 of the global uptrend. And on day 7, we get a buy signal right here. Our rules tell us, right, that we can only take that buy signal if the global uptrend count is 6 or less. That's day 7. So this tells us that the trend may reverse. It's not going to go up forever, guys. You can't follow the PDF instructions that he gives you with the indicator and just take every trade that's with the trend. At some point, the trend is going to stop. You can go back and look at these charts for years. They go up, they go down. They go up, they chop sideways, they go back up, they go down, they chop, they go up. They're not going to stay in one direction forever. Okay? So, this is an indication right here that this uptrend may be about to reverse. So, we would not take that trade. It's a good thing we don't, because what happens? It only moves up 7 or 8 pips, and then we would get stopped out down here with a 55 pip loss, right? So we don't take that trade. However, the next day, that's when the sell signal goes off, right? We're almost in a confirmed downtrend, but we're not yet. However, since this is day 8 of the uptrend, we can take the trade if the sell entry line and the price at the time the signals goes off is below the 89-day, which it is. Again, all these rules are in the sheet in the group. You're not going to remember them. I'm probably confusing you, but all these rules are in the sheet in the group. Okay, that's why we can take that trade, get the profit. The next day, the signal goes off again right here. The global downtrend is in place. It's day 2, and we get the pips again. Okay, so we wouldn't take that losing trade. We would take the 2 winning trades. Back here, we have another buy signal, right? What are we looking at? We're in a global uptrend. What's the global uptrend count? Well, it's day 2, right? So it's safe to take that trade. We would take that trade. What happens? 50 pips or take profit 1. Oh, we don't quite get 50 pips. Moves down. Where's our stop loss? Our stop loss is down here, right? Stop loss is down here. Now, at the time that this signal went off, you may have put your stop loss right here at the 89-day, right? But you don't get hit. So it moves down. You're now, 77 pips below where you got in. And then what happens? moves right back up, 86 pips, 132 pips. So you would get your 50 pips profit on this trade before you get stopped out, and you would be out of the trade. Now you might say, Bill, wow, that's a big risk, right? That stop loss is 137 pips away. Well, there's a money management rule sheet in the group, and based on how many pips you have to risk, you'll use that to determine how big your position size is. So even though you may be risking, 135 pips in one trade, but only 35 pips in another trade, because you're going to adjust your position size, the dollar amount's always going to be the same. If you have $1,000 in your trading account, you're never going to risk more than 3% of that, or $30 in one trade. Okay. And the money management rules are in another document that are in the group as well. So you have to join the group to get those two documents, the buy and sell rules and the money management rules. So you're never going to risk more than $30. So even though you're risking more pips, you're adjusting your position size. Now, there is, depending on the size of your trading account, if you only were able to start with $100, okay, then, it's going to be kind of hard to only risk $3 per trade. So you might have to risk $10 per trade. So you're risking more of your account, but that's because your account's undercapitalized. Okay. Now, sometimes you may not be able to take these trades because of the number of pips that you have to risk. Sometimes you just might not be able to take them. So if you have less money in your trading account, you may only be able to take the trades where the initial pip risk is like 20, 30, 40 pips. But that's all based on your trading account. Okay, let's go back and look at another entry here. Right before that, it looks like this doesn't go off, right? And then when it does get down below there, the line's gone, right? Right here, we seem to get a sell entry, right? But we're not. Let's see what's going on here. We get a sell entry here. We're not in the downtrend. However, the global trend count is 1, 2, 3, 4, 5. What is that? 6. Let's see. 1, 2, 3, 4, 5, 6, 7. So that's day 7, right, of a global downtrend, of a global uptrend. So we would take this trade here, right? Because it's day 7, it's 6 or more, and the signal line's below the 89, price is below the 89. So the global downtrend hasn't been confirmed. We would take that trade, and again, 50 pips. We might not have gotten our profit on this trade, and it moves back up here. Probably would have got stopped out. That looks like a losing trade. So that's one losing trade that we found here. We've been in this video probably for almost 40 minutes here, maybe longer, and we found one trade that didn't go in our favor. Right here, we're able to get 50 pips, right? We take that trade right there, right? The global trend is up. It's 1, 2, 3, only day 4 of the global uptrend. So we take that trade and we get our pips. So this is my review. This video is basically going to be on YouTube. It's going to be my review of the Fibo Quantum indicator. Okay. This indicator is created by Carl Dittman. So there's a link. You do have to purchase this indicator. There will be a link in the group that you can click on to get more information and to purchase the indicator if you do want to. If you do purchase the indicator, just message me in the group and I will send you a template of how I have my MT4 chart set up so that you can set yours up the same way. But you do have to register the license when you purchase that indicator with Carl Dittman, and it will only work on one trading account. So you would put it on your demo account to start, and then when you're ready to start trading live, you would have to switch it to your live account because it will only work on one account. Okay, so this is my review for Fibo Quantum Indicator using the Fibonacci sequence, and I have all the trading rules, all the money management rules, uh, live videos of us taking trades live, uh, chart markups of trades, uh, you know, confirmation images from my cell phone of the trades that we took, confirming that we did take those trades. We just didn't say we did. And all of this stuff is in the group, guys. So click on the link in the description below. Join the group. If you want the indicator right now, there'll be a link for that. Click that, buy the indicator. If not, you can get it later from inside the group, and start using this Fibo Quantum Indicator, guys, because it flat out works if you follow my setup instructions and money management rules. So, Bill Soriano from Pittsburgh, and make it a great day trading Forex using the Fibo Quantum Indicator. I'll talk to you guys later.